market's actually drifting a little bit lower now. End of the day, we did have a big move. It started at around 130 with this big green bar that took us above the 263 and a quarter, which had been resistance all morning. It took us right up to pre-market resistance. So if we step back and look at this from big picture, after the big move to above 270, March 21st gap fill, we failed, we came back down, up below 262. Rallied back to the 268. This is a lower high, higher low. So things are getting tighter. I still think if we can spend some time probably above this 265 area, between 265, 268, or even between 265, 270, maybe like another week, could give us the energy to break through here. But so far, fade has been the trade. Was able to short 2 days ago at 267.89. And you saw what that led to, a pretty big move. And pretty big bounce in yesterday's afternoon. So we're seeing $2 to $3 intraday moves, which that happened probably 5 times last year. It's already happened, I don't know, 20 to 30 times this year. So, which is great. If you understand the type of market we're in, you understand the prices where you should be fading. And I think since we cover that in the morning pretty much every day, you should be learning that by now. Certainly can review the archives. Those trades, getting short the SPYs, long the SPYs, off of important prices, risking 50 cents to make $1.50, $2, those are very scalable trades. Those trades can be made with tens of millions of dollars. So if your goal eventually is to be a pretty big trader, they're well worth your time learning these trades. So end of the day, we got above 265. Then with Apple's good news, they pushed it to 265 and a half. We've come off about 70 cents so far. I'm going to use 264. That's the spot right at the end of the day. We failed at the half here. We flushed through for a quick pop, back up to 265. So this would be kind of the area. 264.50 and 264 would be the two spots if there's some selling on the open. Let's see if we catch a bid. If we catch a bid from here, and we start to consolidate above 265, we want to be mentally prepared for just move all the way right back up. IWM. So it looks like it just followed the same pattern as the SPYs yesterday. Bottoming in the morning. And at 130, the big igniting bar to get it back above 153. It's like 154 and a half. It's an interesting spot here. See the second down leg here from on Monday. That's where it closed right at the end of the day. It was also acted as support on Friday. Excuse me, on Thursday. All right, so a bunch going on still in earnings. This is also another really busy week, just like last week. Apple was the stock du jour after the close, a big market leader. I don't know if I've said this yet since earnings season started, but it used to be that the market leaders, like the Microsofts and the Apples, they would kind of dictate if they were strong, the market would be strong. If they were weak, market weak. There seems to have been a decoupling. In the last few years, there's definitely been a lot of correlations that have disappeared or reversed. I think this is another one where I don't necessarily see the strength or the weakness in these leaders impacting what the SPYs is doing. They seem to be just doing their own thing. So it's just something to keep in mind, but also understand if you have a strong downtrend day or a strong uptrend day, that's can have some impact, even on the in play stuff. So I made one trade in it yesterday, very small. It popped up to 177. I shorted it. It happened to be the high. I wasn't around when it came all the way back down to 172, 173. I would have been buying. Probably even here I would have started to buy. Once it got back above 174, though, it did fail, made a lower high. And then this morning again failed at 177. So in the tighter range would be something like this, 174 to 177. The same thing does apply to as it does to Netflix and Facebook and all the others, which is on the open you can get the flush. It's already come off $2 from the last hour. So if you're not short from here, it's going to be a little bit dangerous shorting it below 175. We just don't know how much it's going to pull back. Let me take a look at the daily. Oh, shit. Hold on a second. I'm going to restart the charts, see if I can get the daily to work. Restarting my chart, see if we can get the dailies there for you. And it worked. Let me just start this sharing again. Okay. So this is very similar to some of the charts I've been showing you since earnings season's really been going. Is it had a big uptrend. It had topped out a little bit above 180. And then since then, we've been in a consolidation period. So let's say the consolidation period really started. Hasn't been going on that long, actually. Right, this was insane, this down move. So I guess this was the February sell-off. If we look at kind of the upper part of this consolidation, we are gapping above 175 right now. You can kind of see if it's below 175. Maybe that's why it melted in the after hours all the way to 172. This was a straight shot from 175, and the next day it went all the way to 165. So there's not really a lot of support until here. That's in the big picture. Let's just zoom back in. We've got a lot of stuff to go, so I'm going to start moving kind of quickly. But yeah, being short, obviously, from the 177s, pre-market and after hours works. If we do actually have a shallow pullback and start to hold in this area here on the open and break to the upside, on the daily, 179, 180 is the next real resistance if we take out this pre-market and after hours resistance. And the other thing to consider is after this down move in the pre-market, it did pop back almost to 176. So it seems like there's going to be some people who try to give it a lower high. So if we do get a bounce, just keep an eye on if it does fail here. And then if it does, I'd be looking for the play into 174. It should be good today. Obviously, Twitter, Facebook, Microsoft treated us really well last week, and I will be trading Apple in that same vein. The next one is JNPR, which was on my banned list a few years ago, but didn't trade cleanly. But the last couple of years, it started to trade better again. It is a technology stock. It is very liquid. You can see I'm sorry. I lost the link when I restarted my my charts. I got to put it in manually. So I think, I don't know if this was a takeover rumor or what this was. I don't even remember if I shorted this pop, but it went crazy one day a couple months ago. When was this? Back in November. Went to the mid-30s, and you can see since then, couldn't get above $29. A lot of resistance there. So still over $2 away from that. And then when it broke down, it was from around 27.5. Good, so I put 27.5 for resistance on there. This is a spot where you'd be looking to see if it fails. You know, they beat by 10%. I'm assuming that the reason why it's up this much, and I think it got a bunch of upgrades too, it did get a few upgrades, is people must think that the guidance is intentionally conservative, because it's up a lot for 8%. Yeah, they did beat by 10%, but the guidance was shit. So I would still look for it to fail in here, and then we'll have to see on the pullback. Maybe it'll be one of these where it fails here, it has a shallow pullback, and retests the high. But if you're short from here and it comes into this area, you want to watch very closely to see if it gets below the half, because it does have a history of having some pretty good reversals. The next one is Snap. The only thing I could think of when they reported was that I thought it was the short of this entry at $20 after the last report, because I didn't think anything had fundamentally changed. Obviously, looking at it now down here at $11, it stings a little bit more. Well, it stings because I actually lost money shorting it that day. It did reverse the following day, made some money, but if you go back in the notes from back then, I think I had 19 and it was a spot. And then, you know, I thought best case scenario, if it got all the way back up to here, this was like the short of the century, and it plowed right through that, went like almost $1 above there. So now the chickens have come home to roost finally. And it was like people were anticipating, like, I don't know what the hell this was all about. It did actually retest above 20 again before filling the gap a couple months later. But clearly the sellers have been in control for the last couple months. And now what's going to happen down here? Is it going to be able to bounce back up to 12 like it did in the after hours? Maybe. This thing seems to have more lives than a cat. So let's see what it's doing. So I know in the after hours, guys were shorting it as it popped back up here to 12. You can see, and in these situations, when you have a down move like this, and it pops and you short it, and then it closes. The next morning, if it's below kind of the support from the after hours, your focus is short. And so you can kind of see this was actually 5 o'clock this morning. It was up at 12. If you're trading at 5 this morning on Arca, it was at 12. So the first thing I would look for is it did have, you know, can it have a little bit of a bounce? My first thought would be like into this area here until 1160. My mindset is to short it. Obviously, right on the open, if it flushes down close to 11 and there's a lot of buying right into 11, I would play it for a little bit of a bounce, but I'd much rather short a pop. I think they're in big trouble. It could easily get to the single digits. The next one is DBD. So they suspended their dividend. They're on a conference call right now. Here's the daily. So it's in a downtrend, and it's just nasty on the daily chart. Right now it's 1330 offer, so it's below here. I don't know how much of this was already expected, but when some company suspends a dividend, a lot of institutions have to sell the stock. And that's why I put it on here. So it's only done 27,000 shares so far. Not a lot of information. I guess the way I would look at it, what do we have for levels? 13.25, none. Yeah, I mean, if it's consolidating below 13.5 on the open and then it takes out the morning low, you want to be short it. You can look for a bounce as well if it starts to hold above 1350. CGNX. CGNX is a great example of a good way to use the multiple support and resistance levels that are in the written game plan. I talked about this the other day, I believe. basically we had 42 as our top resistance. And there was no chance to buy it down here at 38. Obviously, when they opened, the first move was up. Sometimes that happens. Sometimes the best buys are in the pre-market or the after hours. And in this case, first move was up, second bar was up. You want to watch to see. It was a little bit messy. This was kind of our resistance, but it did get back above here, and by 10 o'clock it was holding above. In these situations, when something has an opening drive above the second resistance and it doesn't reverse by 11 o'clock, and it takes out the morning high, it's a long. So above 43, this was like your best signal right here. This was messy, actually. Like, I could see people buying it into this consolidation here. It reminds me actually of Facebook the other day when people bought it into at 74, and then they got, and then they get flushed out onto the big red bar here. But it does quickly get back above the key level. It actually tests morning high, starts to hold above morning high, and this is the clearest long all day. It did go up $2.50 from there. That type of gap fill, that type of strength usually leads to follow through to the upside. So I would say if there was a quick drop out on the open into this support area right here into 45-ish, and you can get it. There's $2.50 of upside to 47.50, which is the next resistance, and $49.5, $50. And then Nutrisystem. This was another one that actually took out resistance on the open, failed at 35, which is a bit of a longer term level. It did come back down to, it did come down to 30 to this blue line. That's where I covered my short from 35. I'm gonna have to go to the longer term on this one. Right. Okay. So yeah. So this one broke down from $40 all the way down to 29, and it came back up to 33. So right now buyers are in control. I would say the way I would look at this is if it's consolidating, and it's a pretty wide spread for more experienced traders, but if it's consolidating above 35, you can play it on the long side. But if it gets up, if it fails, and you're just looking at it, yeah, I mean, sellers were in control really for the last few hours. So I'd want to see it, yeah, definitely if it gets back above 35, definitely could play it on the long side. But if it starts to hold above the afternoon low, you got to look for a move into 33.20 and then a move to 32. You're right. So on the FOMC this afternoon, they're going to not change rates. And so what's going to happen is, like, everyone knows they're not going to change rates. And what you want to do is typically the higher the low for the day will happen right after that announcement. So say, like, let's say we're strong and we get up here like in the morning, and then the announcement happens and they don't change rates. You might get a spike like up to here, and that will be the high for the day. And then you'll get a pullback. Maybe it'll even pull back all the way down to 265. Vice versa, if we happen to be weak this morning and the announcement comes out and there's a down move, it goes to 263, that could be the low of the day, and we'll work our way back up. So just look for mean reverting here, and that's usually kind of the best bet on a day like today. And be careful. You don't want to risk more than 20, 30 cents, but you could catch $1, $1.50 pretty easily if you get in from a good price.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important, and how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.